Hi there and welcome to this thought leadership video where I'm joined by Glenn Wepener, who's the Chief Strategist at First Abu Dhabi Bank. Glenn, great to see you again. It's been a while, hasn't it?
Yeah, it has been a while, but it's always a pleasure to sit down and have a chat with you, James.
Likewise. So last year your oil price forecast was pretty accurate, so congratulations.
Thank you.
What's your thoughts on the oil market for 2024?
Yeah, so the oil prices have been pretty mixed since the start of this year. Obviously supported on one side by geopolitical risks, which are ongoing, and also the OPEC plus output cut accord. On the top side, they've been capped lingering concerns over the outlook for the global economy, particularly I think when it comes to China. China remains the world's second largest oil consumer, and any slowdown there obviously has an impact on demand in general. If we look a little bit deeper, look at global inventories, for example, they're sitting roughly just below the 5-year average. But if you start to look down into some of the other sectors, such as middle distillates, in the US, for example, they're sitting around 7% below the 10-year average right now. And then if we look at US production obviously has grown significantly over the past 12 months or so, hitting the record levels in December last year. But I think that we are either peaked or we're very close to peaking in terms of that output. Most of that growth has been coming from better efficiencies and new technology, and I think the level of that has now come to an end. So I think for this year at least, I don't expect a sort of significant growth in US production again. In fact, the EIA, they produced a report a couple of days ago where they said they didn't see US production hitting that record level again this year. And then on the wider scale, if you look at on the economic side, I think that we will start to see demand pick up in the second half of this year. China, I think, will continue to inject stimulus into its economy. I think the US will have a soft landing. I also think the market will be boosted somewhat by interest rate cuts, which at this point we think will only start to happen in the early part of the second half of this year. So then we combine that as well. Indian growth has been continues to be strong. India is a key consumer of oil as well, or importer of oil. And global travel, I think, is going to be strong again this year. If you look at some of the IATA forecasts, I think it'll be even better than last year. So in general, if you take all of that into account, I'm a little bit more cautious on my price forecast for this year. I'm looking for Brent to average $80 a barrel. So I think in general the market will be in balance. The only thing is, of course, is the geopolitical risks. If one of those changes significantly, then that could have a major impact on prices, of course.
Okay, yeah. $80 a barrel. You mentioned geopolitical risks, and you did a piece last year in November on key risks. Oh. So can you divulge a bit more into those risks, and are they still pertinent for the year 2024?
Yeah, so the piece that I published in end of November last year was basically focused on 5 key risks, but obviously there are several more. And I don't think one of those you can highlight as the most important risk, because all of them have the potential for significant impact. So some of them we're already existing. So when we're talking about things like climate change, US-China relations, we have the largest land war in Europe still ongoing in Ukraine, which sadly I think will continue throughout this year. And then we have some new ones. We have the war between Israel and Hamas, which started on October 7th last year, and which has already had an economic, political, and a humanitarian impact on that part of the world as well. But then, in terms of elections, it's an unprecedented year, right? We have elections in more than 60 countries. Three of those are in the world's largest democracies. So Indonesia, India, and the US. We have 13 in Africa. And I think out of those, probably worth keeping an eye on South Africa, Ghana, and Senegal, because all of these elections that are happening, several of them at least anyway, could have a significant socio-economic impact on the countries themselves. But overall, I would say that the US election is probably the most concerning to me. We know, the US economy is doing well. The US remains the #1 superpower in the world. But the political environment in the US is very fragmented and very divided. In fact, bipartisanship between the Democrats and the Republicans doesn't seem to exist anymore. It's pretty clear as well, I think, that we're going to see a Biden versus Trump Biden and Trump will be the two nominees that to face off at towards the end of this year. And my fear is that we're going to have a very, very close outcome again. Mm-hmm. Now, this is coming in an environment, as I say, in a very politically divided America. We have a situation as well, we've got the rise of artificial intelligence. So I think misinformation, which you've obviously already seen in other elections, we're going to see it at even higher level this year because of that. And what does that mean? Does that mean that significant parts of American society are not going to recognize whoever the eventual winner is? Are we going to have a repeat of what happened in the Capitol building back in January 2021? So, it is a significant risk, and not just a domestic one either, because we're entering a much more multipolar world. We have various fault lines around the world at this point in time. So, as I say, I think that for me is one of the key risks to keep an eye on this year.
Interesting. So we've had the price forecast, we've talked about key risks. We're based in the UAE, so let's keep it a bit more domestically focused. What's your outlook for the UAE in particular for this year?
So that I think is a more positive story. My colleague has a really good phrase that he uses to describe this part of the world. Simon calls it the GCC sweet spot. And if you consider what's happening in the rest of the world right now and has been happening, I think it's a very apt description of this part of the world. I also think we're very fortunate to be living where we live. My family and I have been in the region for 17 years now. We've seen an enormous amount of change over that 17 years, not just in the UAE, but in the GCC as a whole, and positive change. We've seen a large amount of investment flows over the past few years, particularly after COVID. I think the way that the UAE in particular handled COVID was probably the best globally. We've seen more human talent attracted here. We've seen, as I said, investment flows. We've seen more foreign companies wanting to open up in the region, not just in the UAE, of course, but also in Saudi and elsewhere within the GCC. Politically, very stable. Economically, growth is looking positive. If you just have a look at the recent PMI data, for example, if we look at the UAE, we're above 50 still. Same with Saudi Arabia, so well in expansion terms. And I think that the way that the government here has changed the regulatory environment, making it easier for companies to open up here, make it easier for people to bring their families, making it easier for people to get permanent residency in the sense of the Golden Visa program, for example, and the way that they're pushing as well the digital economy. I think this is one of the few places in the world where the digital economy is a real and deep focus moving forward. So I'm pretty optimistic on the UAE and the GCC in general, to be honest.
Makes complete sense. Thank you. Glenn, always a pleasure, always informative, always very insightful, and I look forward to seeing you again in the next quarter.
Always good to see you. Thank you, James.
Thanks,
good to
Glenn.
see you. Cheers.